You, and from the very beginning of this interview, you made a point of it, you have compared what you do with the big banks. You say you take on real risk, you live and die by the trading decisions you make, whereas, as we've seen in the last couple of years, that ain't necessarily so for the biggest banks, for whom failure is not an option as far as national governments are concerned. Do you want to see the big banks stopped from engaging in the sorts of investment activities that you engage in?
Yes. Yes, I do.
And that would be quite simply because that serves you.
I think I see that more at the level of society. I also would say to you, it's inevitable. It's going to happen. What's happening today happened 50, 60 years. It happened in the bankruptcy of the American banking sector in 1932, 1933. And there was speculation became a pejorative term. Taking debt became the least likely thing you would do. And the banking sector became invisible. There was an insistence that it no longer should achieve these very high profit margins. And society's mood and judgment came to pass.
But isn't there an irony, maybe even a contradiction here? Because you've said that you believe transparency is right, that there should be more clarity about what kind of trading is being done and where risk lies. And the truth is that because of what's happened over the last 2 years, the banks are now very heavily regulated, whether it be by the Bank of England or whether it be by the Federal Reserve in the US and their different agencies. They are under very close scrutiny, much more scrutiny than you're under.
I would come back differently. I would say the constancy has been regulation. Outside the nuclear power industry, the financial industry is the most regulated sector in the economy. Okay? I'd say, however, that the most effective form of regulation is that if you mess things up, you fail. And that's the regulation that I'm subject to. In your introduction, you suggested that I take extreme risk. I can promise you I do not take extreme risk. I take on people's hard-earned capital, families that have had wealth and they've passed that wealth from one generation to another. Do you think for one moment they would give it to me, sitting in my office in London, for me to take extreme risks with their capital?
I do think they might well. But many hedge funds, you know as well as I do, hundreds of hedge funds have gone bust in the last couple of years.
Extreme risk means that there is a very high probability of losing all of that capital.
But that's what has happened. I mean, that is the price that people pay to invest in the high-reward industry that you're in.
The world that I operate in is subject to that regulation that they might lose everything. And so I promise you, I spent half of my time allaying their fears, being transparent, addressing all of the issues. Where could I lose money? How much money could I lose? I tell you, I'm losing money this month. It's a very uncomfortable process. My phone never stops.
I'm sure it is, but you from the beginning have insisted to me that one of the key points here is that you, your hedge fund and others like you, are not too big to fail. There is the reality, the possibility of failure.
Indeed. And that's the regulation that I...
Yeah, but my point is this. If the banks, as you want to see, are told they can no longer engage in a whole range of investment banking activities, that sort of activity will be shunted more and more to the so-called shadow banking sector, of which you are a part, making you bigger and therefore gravely exposed to the danger of systemic failure.
Well, I think, okay, so to clarify my position, I do not believe that investment banking should be under the same umbrella as an institution which takes deposits from the British High Street. I think if you're taking deposits from the British High Street, then you're a lender of that money. So you're extending credit in terms of mortgages and credit cards. You're not leveraging up many times and betting on where the Korean won might trade versus the Japanese yen.
Could I come back to the point I made, which is buttressed by a recent report in the Financial Times, and I'm quoting, "The focused crackdown on banking," which we've just discussed, "could just push risk out of the reach of the toughest regulation and into these fast-growing shadow areas."
The consequences, okay, so let's take your point. Yeah? Let's accept your point that we disintermediate it and we're spreading, we're just moving the risk rather than taking the risk out of the system. I could accept that.
Well, that's hardly reassuring to our viewers around the world, is it?
The reassurance I would seek is if the bodies who are subject to risk-taking, if as a result of them making mistakes, they either lose money or they jeopardize their future, then the risk that they take will be a more calculated and a more socially endearing form of risk-taking, more durable form of risk-taking. If, on the other hand, they have no fear of the consequences of their risk-taking, which is how you categorize the last 5 years, then we all end up paying the consequences.
Interesting you talk there about the socially endearing forms of risk-taking, suggesting you do think about the environment in which you work. Of course, you have to. The political weather has changed a great deal in the last 2 years, hasn't it? I just wonder whether that is affecting your view of the balance between risk and reward. Because I want to talk about reward a little bit as well.
It absolutely does. A lot of my... I'd say 80%, almost 80% of my activity is engaged in the interpretation of social mood. And social mood has changed.
How would you characterize that?
Well, in the sense that speculation is a pejorative term. Yeah, it's now loaded. You wouldn't offer that without being pressed that you're a speculator. You know, it has some kind of evil connotation.
I mean, when we see, for example, Mervyn King, who runs the Bank of England, going to the Trades Union Congress and saying, your members are entitled to be angry. Do you worry, again, about what that says about the shifting mood and where it leaves businesses such as your own?
Where it leaves all of us. The one problem emanating from the last decade is that the prosperity that what seemed like prosperity, which was emerging from the banking and financial circles, of course, has vanished. But we committed to spending within the economy, and that was predicated on that tax revenue always being there. So in some respects, the politicians, I see the politicians and the bankers as just sides of the same coin. Both of them lived the dream, and the politicians spent the money, and that's why the Danish PM, former PM, is so annoyed, because he actually thought it was a panacea, all of this revenue would never stop, and that you could build castles in the air, and that's come to pass.